Welcome to a quick tutorial on cyber threats. I'd really like to look at the letter C because C is for cyber insurance. Now, in July 2019, more than 100 million customers had their personal information exposed following a massive data breach at Capital One, the fifth largest credit card issuer in the US. Data breaches are not restricted to large financial institutions though. We've seen the airlines suffer, the entertainment industry, healthcare, hotels and restaurants, the retail sector, social media platforms, manufacturing. Basically, anyone and everyone can suffer a cyber incident like a data breach. So what is the impact of a cyber incident? Well, as well as financial damage, you can suffer massive reputational harm, and that might actually spell the end of you in your organization. A data breach can also have a significant impact on an organization's operational capabilities. Back in 2017, one of the world's largest snack companies reported that due to a global malware incident, a significant portion of the company's global sales, distribution, and financial networks were affected. This caused losses somewhere around the region of $54 million in just 9 months. In fact, we regularly tell our customers that cybercrime is costing the UK 27 billion every year. That's like spending £3 million every single day for the next 27 years. It's a real whopper. Despite all the risks associated with the cyber attack, many companies find that general liability insurance won't cover these types of incidents, hence the reason for this video. So the big questions are, what insurance options do I have and what's best for my organization? And essentially we have two options, first-party cyber insurance or third-party cyber insurance. Now, first-party cyber insurance provides financial assistance to cover the organization's own damages. So you're looking at covering the cost of things like notifying and communicating with impacted customers, because that gets expensive. Alternatively, it might be providing credit monitoring services, because some of your customers may have had personal data stolen and will become the victims of identity theft. This type of insurance will help pay for crisis management, such as repairing reputational damage, restoring business functions, or just kind of keeping your business going during the incident when all your IT systems may be collapsing. Again, first-party insurance will probably help you with some of the costs associated with launching an investigation. Now, both incident and forensic investigations can cost a complete fortune, but they are often necessary to determine what happened, the extent of harm, how to fix the problem, or just prevent the same thing from happening again. And such investigations are usually done by an external third party, which is why it can be costly, or perhaps local law enforcement. However, we're not talking about getting any sort of coverage to give customers money. For that, you need third-party insurance. So third-party insurance offers coverage if a consumer or customer is impacted by your cyber incident. So it covers things like the cost of private or public litigation. It might cover settlements, fines, attorney fees or solicitor fees. It might cover other legal expenses that arise, witness fees, expert opinion, that kind of thing. So you might think, awesome, I'll get first and third party cyber insurance and transfer all my risk. Job done. Not true. Every company needs to show due care and diligence, and that means developing two types of plans, a business continuity plan and a disaster recovery plan. Now, a business continuity plan involves defining the risks that may affect your operations and their potential impact. And you do this so you can come up with ways of keeping the show on the road when there are serious IT problems. What are your workarounds, right? By contrast, a disaster recovery plan is about restoring normal business processes after an incident. So you identify which systems are mission critical, you plan which systems to recover first, you develop a clear communication strategy for all the relevant stakeholders, and then you do some tests. You test that those systems can be restored if a disaster occurs. And the key point here is that all organizations should have plans in place to preserve business operations in the event of a cyber incident or cyber disaster. Otherwise, no amount of insurance will save you. Incidents can take all shapes and sizes. They can be the result of simple human error, but it can also arise from accidents, insider threats, industrial espionage, attacks from cyber criminals, all sorts. Having plans in place to respond to such incidents will minimize the impact and the disruption it will have. So how do we go about determining what insurance is best for us? Well, we've got to ask ourselves some questions. What sensitive information do we hold? Is it personal identifiable information, such as the stuff that falls under GDPR? That would also cover personal health information. Is it industry regulated, like credit and debit card data? Is it trade secrets or confidential business plans? We ask these questions so we can appreciate the impact to the organization if it were to lose this information or suffer exposure. That makes us think of the legal, regulatory, or contractual penalties we might incur, or money lost from a sullied reputation or interrupted operations. Now we need to identify the areas we want to insure. For example, any interruption to business operations will be expensive, so we might want to have that covered. We might also want to cover the cost of legal advice, forensic investigations, incident assessments, credit monitoring services, notifying affected parties, crisis management and public relations. We've got to consider the expenses associated with lost or stolen devices, such as laptops and smartphones, or replacing damaged hardware. We've got to consider the cost of lost or stolen data, or we might also want coverage for any incident occurring in third-party systems, such as our vendors and suppliers. Again, I'm thinking of getting coverage for any form of litigation. A security incident is going to adversely impact on our employees or customers, or third parties whose confidential information or intellectual property we've exposed. We could be facing an alleged breach of contract or negligence, and we might want to pay for investigations or fines and penalties which may have been imposed by regulators. Our cyber insurance also needs to move beyond traditional network security attacks, such as denial of service or website defacement, and cover more recent attack vectors, such as social engineering, phishing, and ransomware. Additionally, you might want your policy to cover incidents that happen anywhere in the world, especially if you operate at an international level. Okay, to evaluate all the different products out there, we need a quick understanding of the different components that make up a policy. There is a declaration section. This covers basic organization details: name, address, policy number, coverage, limitations, start and stop dates, that sort of thing. Be careful here to check that any important affiliates or subsidiaries that might end up costing you money are included in this section. Insuring agreement. This defines exactly which events or circumstances are covered. The language used here is extremely precise and will make or break your arguments for financial compensation. Conditions. Duties and responsibility of the policyholder and the insurer before and after an incident are spelled out here. For example, this section will tell you how quickly you must report an incident. Are we talking a couple of days or straight away? Exclusions. Exclusions might come as its own discrete section, which is really helpful, or just mentioned throughout the policy, which is not. Whatever shape or form it takes, you need to understand the exclusions. For example, many insurance companies will give you Zippo if the data you lost wasn't encrypted, which is a bit cheeky because if it was encrypted, you probably wouldn't need the insurance anyway. Watch for phrases like "the following exclusions apply" unless specifically stated elsewhere in the contract. And finally, definitions and miscellaneous provisions. Be careful that you understand the terminology and that it matches what your insurer says. For example, many policyholders and their insurers have disputed whether a phishing attack falls within scope, because often the money is transferred voluntarily by the victim because they were tricked, rather than the attacker using some sort of hacking tool. Generally speaking, the broader the policy coverage, the more expensive it will be. That's why it's critical to assess the value of the assets to be covered and to think carefully about the types of risk the organisation faces. Purchasing a standard off-the-shelf policy is generally best suited for small organisations looking for a package that covers the most critical areas without spending hours trying to negotiate and wanting to keep premiums to a minimum. However, if the organisation is larger, perhaps making it a more attractive target, or if the organisation is exposed to risks that go beyond standard coverage due to the nature of the information they collect or the industry in which the organisation operates, financial services, healthcare, that sort of thing, a bespoke policy might be better. Interestingly, one reputable company did some basic math and found that a cost of a single data breach floats around 3 million quid, which is up by 12% from 2014 and places the average cost of each record lost at about £116. When negotiating a policy or just checking out what's on offer, ask what the key differences are between policies in terms of features, coverage, exclusions and pricing. Consider whether the policy is supplemental to general liability or a standalone cyber policy, which is usually more comprehensive. As to what extent the policy can be customized, think about the deductibles. Does it cover first-party and third-party events? What type of threats are covered? For example, not all policies cover internal threats, such as an employee misplacing a device. Do they only focus on targeted attacks or general IT issues, like network outage? Are there reduction clauses for social engineering, and if so, by how much? Does the policy mention any specific timeframes? Don't forget that many attacks take place over several months. Finally, watch for ransomware clauses, especially the role of the insurer in any form of negotiation or payments. Now, there are some key exclusions I need you to look out for. Thresholds. Failure to assess the level of risk may result in you asking for too much insurance, which is costly, or too little and end up footing the bill. In the Target data breach, which took place in 2013, the retail giant got $90 million worth of coverage, but still ended up with a deficit of $162 million. Secondly, watch for non-encrypted information and ransomware payments. That is, many insurers won't pay if personal information is not encrypted. Neither will most companies reimburse ransomware payments, which can be ethically suspect. Thirdly, you might have trouble getting coverage for fines or reimbursement after enforcement actions. I'm thinking of GDP in particular here. And lastly, there is no coverage for vicarious liability. You cannot delegate data ownership. For example, just because you put sensitive data in the cloud or ask some third party to store and process it on your behalf doesn't mean you are exempt for paying out when things go wrong. If you need coverage for that, make sure those organizations feature in your policy. Brilliant. The last step, measure. This involves reviewing your policy and keeping it up to date. There are lots of reasons why you need to continually review your coverage. Cybersecurity risks change all the time. As new types of threats appear, so will the type of coverage you need. Business operations also change, which may put you at greater risk or require you to collect other sensitive data for which you need coverage. Again, your company may undergo mergers or divestitures, changes with the supply chain. You might start to use new equipment or technologies, such as cloud computing, or workers using personal devices to remote in. Such changes are an opportunity to reflect on what you need and whether you are happy with current exclusions.